Pre-approval doesn't mean done. It means we're getting started. It's the green light to shop, not the finish line. Because once you're under contract, the loan still has to make it through appraisals, underwriting, and a checklist of other verifications that can feel a little intense if you don't know what's coming next. Today, we're breaking down what your lender needs from you, why they're asking, and how to keep your closing on track without the stress spiral. Hi, everyone. I'm Tabitha, or Tabby Klein, the ILM Realtor, a local realtor here in Wilmington, North Carolina. Today, we're doing a super practical episode, Loan Officer 101, what your lender needs from you, why they're asking, and how to keep your mortgage process smooth. All right, before we jump in, today's guest is Heath Altman, a mortgage loan officer with Alpha Mortgage right here in Wilmington. And he's been in the lending world for about 20 years. Heath specializes in conventional, FHA, VA, and USDA loans, and his job is all about making the process transparent and streamlined so buyers don't feel like they're guessing the whole way through. Now, let's get started. Hi, Heath. How are you today?
Good, thanks. How are you, Tabby?
I am wonderful. I would love to start with just getting a little bit of information about you, who you are, how long you've lived in Wilmington, all the good details.
I am Heath Altman with Alpha Mortgage. I've been in Wilmington for about, I hate to even say it, but over 30 years. Came to UNCW, played baseball here, finished my playing career, then went on, played pro ball for a while, came back, coached a little bit at UNCW, and did a few other jobs, had off-season jobs during pro ball, but came back and got in the mortgage business 20 years ago, and here I am. It's just, it offers a lot of freedom for me to do what I want to do, so that's why I'm still in it.
This is brand new information to me. I don't know how I did not know this about you.
About UNCW or about pro ball?
UNCW, baseball, any of it.
Yeah.
That's really cool.
Yeah, I played baseball there and then played professionally for about 8 years, just migrated to the mortgage industry.
So Heath, you've been doing this for over 20 years. Can you sum up your role? What do you do?
I have to make it about the buyer or the client. It's never about me. And it shouldn't be about the realtor or anything, because these are real people trying to buy a house or refinance to help their family. It's all about them. It's not about me. So I look for the best situation for the buyer, whoever's refinancing. It's got to be what's best for them. If it's not, then I'm just looking to make a dollar and move on instead of caring about people. And these are real people. Everyone that calls has a story. It's about them, not me. Yeah.
I love that. I love being in this field because I do feel like our little touches in this are so important to the big picture of their lives. Like getting into a home or refinancing, that's huge on how it will impact them. So I love that.
It's the biggest decision they'll make.
Okay. Walk me through step by step. I'm calling you for the first time. I've never bought a house before. What does this process look like?
It should be very simple. When someone calls in, they don't know. Or either they really know. So some people that call in, they know if they have good credit. They know if they have the money to put down. They know if they're prepared. And that's my biggest thing about it. You may ask this later, but what do you do? Well, you need to be prepared. And the only way to know is to know. So you can find out on your own at home. You can look through and say, I can afford a $3,000 a month mortgage payment, or I can afford a $1,500 or $5,500. To call in and just think that you may be able to, it's probably not the right avenue to take. When people call in, I try to soften it because they don't do this every day. They don't call trying to buy a house every day. So I'll do a soft pull first. I'll add them to a do not call list, which is important, which is big, which is good for 5 years. And then I run a program that may be best suited for them, whether it's a conventional loan, FHA. It depends on how much they want to put down. Sometimes people call in and they think they can get 100% financing just by calling in. Like, hey, well, I want to buy this house. Some really do not understand.
One of my favorite things to say is you don't know what you don't know. And it applies across every industry. You can either call knowing, like, hey, I know I've got good credit, or I've bought a house before. But then some of these new buyers, they've never even heard of a pre-approval. So a pre-approval, and you talking about that soft pull, what does that mean?
The soft It's not going to affect your credit score like a hard pull would or will.
So for somebody worried about their credit, a soft pull is something that feels a little bit safer.
Yeah, and it's perfect that you say, because I always say you don't know until you know, right? Because there are people that call in and say, well, I don't really know what I can afford. That's why I'm here, because we can pull it up and see your debt ratio, which is your money going out versus your money coming in. And we need to be around the 50% or less
Good to know.
Number. There's so many people that they do call in, they can buy a bigger house or a higher priced house with their mortgage, but can you really afford it? I go into that sometimes too. And I'm not trying to give it away to have them call someone else, but sometimes the ratios fit, but it may not fit their lifestyle. So we talk about that too.
Super important. Being house poor is a real thing where you can absolutely on paper afford to be in something, but that does not mean it's going to be comfortable. That means your eating out budget goes away. Your vacation budget can disappear. So making sure to know what people want in a lifestyle, not just a home, and what fits them seems super important.
There are also times when the ratios are higher, when debt ratios are higher, because they're only using one of the two borrowers.
Mhm.
So say a husband and wife come in and the wife makes X amount of dollars, she qualifies for the loan, but it's tight on the ratios. Well, I know the husband's not on the loan, but I know that he makes money also. So that's some comfort there for them, right?
So we've got the soft pull, that kind of pre-qualifying, looking at some of our finances. What comes next?
So the soft pull gets us going. I'm able to issue a pre-approval from that. Just based on, especially if someone is a W-2 employee, is a salary employee. So say someone works at GE or PPD or just a regular W-2 job, then I can basically look at this and say, okay, I can issue a pre-approval without getting
Deep in the nitty-gritty.
deep into the nitty-gritty. But I would like to get some pay stubs and W-2s initially just to show, okay, this is real, right? I'll issue a pre-approval from there. Then I send them a list of things I need to get from them to go to processing and underwriting. So our underwriting usually takes about 48 hours. So if they go under contract, I'll turn all that in and we'll order everything under the sun, title work, appraisal, everything that we need. We'll get insurance quotes for them. We'll get everything that we need to move on to underwriting. And then once I add them to the do not call list, we will pull a hard pull later before closing. Yes.
So I've never heard of this part. So when you do the soft pull, you add them to the do not call list. What's that for?
Well, do you receive spam calls?
Every day, all day long.
So you can be added to a do not call list, which should stop those spam calls for 5 years. And no matter how protected we are or your credit may be, somehow they still get through and call you and drive you crazy all day long, especially when someone pulls your credit. So we do a soft pull first, add them to a do not call list, and then we do a hard pull later.
That is a level of customer service that
is a
I
level
can
of free
get
customer
behind.
service that we offer.
That's amazing. Yeah, every time, I think it was when we did the home equity line of credit, the HELOC for our backyard, we put in a pool and a patio and a pergola. We did this giant backyard project. My mailbox was just overflowing with different rates and different things, and my phone was blowing up, and now I know why.
It's definitely a good service to have once the soft pull is done and to be added to that list.
So now I've got my pre-qualification. You're working behind the scenes. And now as a client, the realtors, I'm taking people out to look at houses, given this price point that you've kind of put together for us.
Yeah. So I will call, I may not issue the pre-approval right away, but I'll let the realtor know, hey, they are good. They are good to go for this price range. I don't like to send out a pre-approval if they qualify for 800,000, but you're only going to look at 500 or 600,000. I'm not going to send you a pre-approval for $850,000. You don't want to turn that in on a $600,000 house, right? Just
Correct.
showing the brand. Once you guys go out, I always tell my clients, I'm like, send me an email or a text of the houses that you're interested in, and I'll run numbers on those. And then they get really more specific then to let you know as a realtor, we want to be in the $600,000 range. This is what we're looking at, and this is how much we're going to put down. I always say, okay, you qualify for a $500,000 loan amount. You can buy a $2 million house as long as you put down enough to get to the $500,000 loan amount. That's where the debt to income ratio is. It's not in the home price, it's in the loan amount. And that's key because there's a lot of people that may misunderstand that at first. Well, he said, I'm only qualified for $500,000. No, that's the loan amount. So you could buy an $800,000 house if you're putting down $300,000 to get to $500,000. That's where the debt ratio comes into play. That debt ratio, along with your other debt, that equals up to your ratio, to your debt ratio, your qualifying debt ratio.
And I like what you said about if the realtors, if these people looking for loans, your clients are sending you the houses that they're interested in, and you can run the numbers. Because I was talking to a couple different insurance agents recently, and they were talking about how big of a gap you can really get between these oceanfront properties, these creekfront properties, and then something right on College Road that has a significantly less likelihood of devastating flood. So that's good to know if you're running numbers numbers on all of that.
Yeah, especially if it's a fringe property, it could be okay on the water or in town. The insurance may be a little bit different, right? And taxes may be a little bit different.
Hmm.
But I'll get an insurance quote to put it in there to help with the ratios. So HOA come into
Yeah,
play a lot of times too. Even though the HOA is paid on your own, the buyers have to pay that. We show that as a debt for the mortgage payment.
that makes
That is
sense.
key because there's a lot of times someone may buy a townhouse. It's a $300 to $400 HOA due, right? Well, you'll have an HO6 policy on the interior, which covers the inside of your
Well, then,
townhouse. That's right. But then you have the HOA policy that covers everything else. So we add that to it. So you won't get actual homeowners along with the HOA. You'll just have that. You'll just have a small HO6 policy.
yeah. And that's really that wave of escrow where you're either, oceanfront, a little bit higher insurance, maybe not an HOA, versus a condo downtown where you might have a smaller mortgage or, a less expensive property, less expensive insurance, but your HOA is extremely high because you're in a condo unit. So good to
That's
know
right.
that that's coming together very early on in the process instead
Yeah.
of figuring it out at the end.
Yeah, but also some of these larger neighborhoods, Landfall, Brunswick
Yeah.
Forest, these places, you'll have your homeowner's insurance because you do have a single family residence, right?
Hmm.
Detached, but they have high HOA dues.
They
So
do.
you really have to take that into account on the ratios.
We absolutely do. Now we've gone through pre-qualification. We're starting to get all our approvals done. We've looked at a house. We want to go under contract. Where do you come into play in that phase?
All right. So you found the house that you want. This is your home.
It's perfect.
It's not a house anymore. This is your home, right?
Yes.
Yeah. So they have the list of everything I need to get from them to turn this into underwriting. I send that right away. Sometimes people are like, why do you need it now? Well, I want to get it up front to make sure. So when you find the home that you want, that this is your home, then I can pass this along to my processor. So what I'll do is I'll send the list out. And if you're a salaried employee or a W-2, then I'll ask for the most recent year's W-2. I'll ask for pay stubs covering 30 days, bank statements covering 60 days, all pages, because some people just want to turn in one of 15 and they're like, well, there's nothing else on the other pages, 12 pages. Well, it doesn't matter. Everyone's not as honest as you. And sometimes there's fraud that goes along. And these underwriters are tasked with making sure that there is no fraudulent activity. All right. So we need all pages to that. Photo IDs. So it's very simple.
Now, what if we shift gears to somebody who is 1099? Does that change things up a good bit?
Yeah. If you're self-employed, which is 1099, you will get the last 2 years of everything, your personal and business federal tax returns, all pages, all your schedules. Sometimes we may get away with just 1 year, but just know it's probably going to be the last 2 years of everything to show consistency. I know you may write a lot of things off and we can add some depreciation back, but we need to see everything to be able to do that.
Good to know.
And that's
2
not that
years.
hard. We're not going to ask you if you're coming to buy a home, we're not going to ask you for anything that you don't have, right? If the information you're telling me is correct, then I'm not going to ask you for anything that you don't have.
I heard something funny the other day. Loan officer was saying, we pinky promise that we don't judge you for your spending, or we're not looking line item by line item, seeing how many times you went to Starbucks this month. That's not what we're doing. Is that true?
On the bank
Yes.
statements, absolutely not. No, not at all. What we will look at is anything odd that goes in there. The processor or the underwriter will scan down and see $6,000 deposit 2 months in a row that it's not a part of work. What is that? We have to find out. Is that a gift from a parent? It's got to match up. Anytime you have deposits in your bank account, it's got to match up to your job, or to if someone's on Social Security or a pension. You will have to paper trail that of where it came from and why. And that reason is, here again, it's because of fraud. They don't know where that money come from. You could be laundering money. And here again, that is a task as an underwriter to not just let that slide. Have to paper trail any large deposits that are not normal.
Well, that feels like the safest way to do it as well, because I know the worst thing that could possibly happen is we think that there's enough money coming in, and then we're in our home and realizing that there's not. So while it feels a little invasive, the professional is making sure that this is something that you can sustain.
Correct. And also, let me go back to having cash to put down on your house. Someone tells me I'm going to put down 300 grand. Okay. Well, we need to show that in a statement. I haven't had it as much over the last few years, but some people really get upset or don't want to tell me where the cash is coming from. I've had it before where I have cash. It's in my house. Why do you need to know where it's coming from? Well, if it's not documented, then you can't use that cash. If you have cash in a safe sitting at your house and you tell me, okay, well, I'm going to bring 50 grand, 100 grand, whatever, cash from your safe, that we can't use those funds. Does that make sense? We can't use them. We have to have that documented. So if you know you're going to buy a house in a year from now and you have all this cash sitting in a safe, you need to take that cash and season it by putting it in the bank. So when
I
you
like
get
that
bank
word.
statements,
I like
yeah,
season it. That sounds
yeah,
good.
there you go. You were in culinary, so that's
I
why.
was in culinary,
Yeah,
so
yeah,
season your funds. Well, and it'll grow a little bit of interest in that next year as well versus sitting in your
right.
safe.
That's right.
Awesome. All right, so now underwriting is on it. What is our next step?
So underwriting generally takes about 48 hours, sometimes less, sometimes we get it. So when it comes back from the underwriter, there shouldn't be a long list. If I've done my job and the processor's done their job, then it shouldn't be a long list when it comes back. And I always tell my clients, when it comes back from the underwriter, we're not going to be asking for anything that you don't have. Right. So don't worry about it. I'm going through it with someone right now. They are stressed out. You have what we need if we need anything. Right. There's nothing mysterious about what we're going to ask for. Everything's clean. So the underwriter will send an email back to myself and the processor. Processor will then email the borrower with things that we need. The processor will also email the realtor if there's anything left out from the contract. If we're missing a page or an addendum or a date or signature, she's going to email the realtor and let the realtor know exactly what is needed along with the borrower to let them know exactly what's needed.
We're
What's that?
catching anything that's falling through the cracks already.
That's right. Yep. Up front. Now, once it goes to my processor and you're under contract, she's going to order the appraisal and title work through the attorney that we've chosen or you've chosen. And she's going to make sure the insurance, the homeowner's insurance is there. Right. So once all that comes back, she submits everything back to the underwriter. And then we're hoping for a clear to close. Well, if the underwriter sees something else, they'll come back. But sometimes they come back and the borrower never knows it because we're like, well, we have that. Here it is. Here it is. We had that. It could be good to go at that point. And we're pretty good about getting this all up front, getting clear to close early. I just had one that closed in 15 days. And
That's so fast.
that was a self-employed borrower, a non-occupying co-borrower, and we got that done in 15 days.
That's
so
impressive.
we do it quickly. And the reason we do it quickly here at Alpha, everyone, is because everybody's here in-house. Everybody's in Wilmington. We don't send our underwriting out to Iowa, to Florida, Louisiana. We have underwriters here in-house that we talk to daily.
So you can go knock on their door and be like, get with the program if something's running behind.
I can do that. And we fund all of our own loans too, which make a huge difference. So we are the bank. We'll sell them on the secondary market, but we'll fund all our loans through Alpha Mortgage.
So we're under contract to everything, and then closing. What does that look like?
Well, closing, that's the most simple part of everything because you get everything up front. And I'll go back to once it goes to the processor. Once it goes to the processor, then I'll lead up to closing. But
Sure.
once it goes to the processor, you'll receive an e-package to sign. I would have someone come in and sign these documents, and it's 80 pages of signing. Well, now it's all sent via email. So if there's two borrowers, we'll need an email for each borrower, for both borrowers, okay? Because they'll go to their email. They'll e-sign the documents, which makes it a lot easier to come back in for compliance. And then as far as it getting to closing, the morning of closing, you'll be sent an e-package also to e-sign before you get to closing. There'll be some signatures that require wet sign at the attorney's office.
So those are different for people who've never heard the difference. Like you can't just e-sign everything when it comes to buying a home. Some wet signatures are required.
Correct. They are required. And you can do that at the attorney's office. You don't have to sign the e-docs that morning, but it makes it so much easier on the buyer. And at that point, there are no surprises. So many people say, I don't want any surprises. That's not the way it works. The loan officers and the mortgage companies that gave you surprises before are not in this business anymore. They are gone. You see everything up front. From the get-go, I send you a loan estimate so you can see numbers. They will not be exact. It's a very preliminary closing disclosure, but you can get an idea of it. And then when you get to closing or prior to, you have to sign the closing disclosure 3 days prior to closing. So you know all the numbers then. And then our closer and the attorney make sure all the taxes are prorated correctly and everything is in line. Our closing disclosures have to match up. Alphas has to match up with the attorneys and vice versa. And then the borrower will see what the exact numbers are. So we're not off very much initially, and then it just smooths itself out until the final numbers are there. So there are no surprises.
So those preliminary numbers, it's more like a guideline. We're saying, hey, this is a soft pull. We're making sure that you can go start looking and we feel confident. And then as we find the properties, we're doing harder pulls, getting that documentation, behind the scenes work is going on. And then when we were talking about closing attorneys and stuff like that, I was from Virginia. And when I moved down here in Wilmington and I bought my house here, it was such a different process. Can you tell me what the attorney's job is in this? Like, it feels weird to have an attorney in our real estate process.
Not to me, because that's all we've ever known, right? The attorney should be working for both of us on this, right? And especially the buyer. So the attorney will pull title work, which is so key because some of this land was owned by lots of other people prior to you buying it, right?
Mhm.
So title work has to be clean coming back, and you're protected by getting the title work. You'll have owner's title work and lender's title work, right? And it protects both of us. It protects the buyer and it protects the lender. I had a case where a friend of mine was buying a property out in Brunswick County. So a landowner traced all the way back to this guy signed the Declaration of Independence, and he owned land out in Brunswick County.
Oh my goodness.
All of it was tied up with his heirs. I think people were buying properties in this area, and the title work somehow got all convoluted. It was under a lawsuit for a long time.
So for people who still have that question mark when we were saying title work, it's really drawing the line back to who's owned this property before you and who gave away their legal right to it to make sure that somewhere along the line, nothing went astray and somebody can't come back and say, hey, that was mine. And the
That is
reason that
perfect.
we as like buyers, if I'm pretending to be the buyer right now, we as buyers, that's important to us. But you as a lender, you're loaning us money on that property. So the reason that you also need help with title is to make sure that you're not loaning us money on a property that we might not even have the right to.
That's perfect. You are an ace. That's exactly right.
I
That's
just finished
exactly.
a lot of continuing education, and
Yeah.
title was one of the things that, because it was positioned so differently than Virginia, that I had the hardest time really wrapping my head around it. I did a lot of research into title. So thank you.
Yeah. That's very good. It's much better than I could have explained it.
One more big question that I feel like I hear a lot and I'd love some clarification on. When we were talking about bank statements and money coming in and where did this come from? And you had said gifts. So my parents might be gifting me an inheritance early, or my grandma passed away and she's gifting me some money. Where is the line there? Where are you allowed to get money from and where are you not allowed to get money from?
Great question. And it has to be basically from a relative. Okay.
Basically from a relative.
Yeah. You can get money gifted to you. To create a paper trail, we'll send you a gift letter to have it filled out by the gifter with their account information on there. And then we may get a bank statement showing that they have the ability to give.
Okay.
Yes. So
That's
we're not trying to get too invasive, but we have to prove here again where the money came from. So if a parent's going to gift you 20% down, we're going to get a gift letter and a bank statement showing the gifter's ability to give.
So last thing that we're going to do is I'm going to rapid fire to you. And can I do this while I'm under contract?
Yep.
So we're pre-qualified. We've got the letters. We're under contract on the house. Can I buy a car?
You can. I don't want you to. Every situation is different because of debt ratios. If you go buy a car, we're going to count that debt against you as far as the monthly payment, if there's a monthly payment. If there's not a monthly payment, if you're taking cash out of something, that cash may affect your ability to buy this house. So I would suggest that you don't do that at all. If you're buying a house right now, you don't need to be buying a car.
So please no. Please no.
That would be great not to.
Should I start financing or buying furniture for my house?
You should not. You should wait until this is over. Here again, if you do that, we're going to count that debt against you. And if your ratios are tight, then it can knock you out of buying the house.
Can I co-sign for someone?
You should not be co-signing for anyone during the mortgage buying process.
Should I pay off a bunch of debt while under contract?
If we haven't talked about it and you don't need to pay off a bunch of debt, then don't pay off the debt right now.
Please don't.
Real quick, I know this is rapid fire, but we have a credit department that if you do have low scores, she'll tell you exactly what you need to do. She'll put you on a plan to get your credit scores up. So if you're at a 620 score, man, we need to get this thing to 680, 700. She'll have a plan that what it takes and how long it will take to get to a 680 or 700.
That's great customer service again. Like just,
Yes.
hey, we might not be able to make this work right now. Here's all the tools that you're going to be able to use to make it happen. Okay, last one. Can I change jobs?
No, you cannot change jobs and you shouldn't be changing jobs. If we're closing within 30 days, we get a verification of employment up front. My processor does. And this says whether you're likely to continue your job or not. And if we get something that says you're likely to continue your job, then you're going to continue your job throughout this process. If they were closing in 30 days, if you change jobs, especially if you're going from a W-2 employee to a self-employed, that's not going to work. You're out. You are out. You're not buying this home anymore.
And then you can lose your due diligence, which is the kind of money that you put up when you buy your home to kind of say, hey, I'm super serious about this. I'm willing to lose this amount of money if I back out. That's gone. And
Yeah,
if
that's
you're
right.
past the inspection stages and stuff like that, you'll lose your earnest money as well. You might want a new job, but you're going to be losing a lot of money by taking it.
Right. That needs to be in your plan when you're buying a home.
Well, Heath, this was amazing. I loved this. Is there any last minute wrap up things that we missed, didn't cover, that you think that the people of Wilmington need to hear?
Well, the people of Wilmington, first of all, this is a great place to buy. I really believe that this is the best place to live. I do believe that. I've been all around the country and I do love Wilmington more than anywhere else. It's a great, big, small town. Don't let the apprehension you have deter you from looking for a new home or wondering whether you can afford it. It's not hard to find out what exactly you qualify for. It's not a pressure situation. I tell people all the time, you don't know until you know. Like you said earlier, you may be able to afford more than you think you can or not, but it's a simple process and it's all about the buyer, not me. And so we're just looking at it and accommodating what fits you best.
Awesome. Well, we appreciate you so much. If somebody wants to reach out to get this process started, to figure out what they could afford or what they can't afford, to know if they can move forward, how would they contact you?
You can call me, my cell, 910-512-1220.
Giving out your cell phone number just like that. I love it.
Yeah, you can call me. That's the way to get in touch. And give me a call. I'll help you any way I can.
Awesome. Well, thank you so much, Heath. I appreciate you so much, and I look forward to seeing you soon.
All right. Thanks so much, Tabby.
Thank you so much for listening to the ILM Realtor podcast. Please like and follow across Spotify, Facebook, Instagram, and YouTube as we continue to have guests come on to demystify the home buying in Wilmington. We are going to continue to have people coming on talking about scams in real estate, title companies and what they do, home inspections and why you need to have them, and what it really takes to market a home, even a luxury home. Thank you again for listening to the ILM Realtor podcast, and I hope to see you around our perfect little city.